Yes, now we move on to the rising wedge. The rising wedge is a bearish pattern. What happens in this pattern is that when the market has made a movement, bearish or bullish doesn't matter. After the trade, when it comes into consolidation, markets will expand, then contract. It's in the nature of markets. They will go into a trend, then into consolidation, into a range. Then it will go back into the trend. So when the price starts to stall, we start making higher highs and higher lows at a decreasing pace. That is, what we have starts becoming smaller than the previous one. So what do we have to do? We have to draw a trend line below it. We have to draw a trend line above it. We will draw and we will get a rising edge. So this pattern can be a continuation pattern or a reversal pattern, but most of the time this will be a down pattern signal. So how do you trade in this? Whenever there is a breakout of the wedge, you have to enter at the breakout. Your stop loss will be on the upper side of the wedge. That will be your target. It will be the starting of the wedge. Where the wedge started and the distance between them, that will be your profit target. Similarly, we have the falling wedge, the other counterpart of the rising wedge. Just as the rising wedge is a bearish signal, the falling wedge is a bullish signal. Okay. What happens in this? The price made a big move, whether bearish or bullish, it doesn't matter. What did the price do later on? Starting maker making lower high and rolls and decreasing pace. It started to slow down like this. You saw this, you drew consolidation both above and below. You got a wedge. Now how to trade this wedge? Same as for rising base, but opposite, a bullish signal. As soon as you get an upside break, you have to make an entry and place your stop loss on the other side of the wedge, and its target should be from the starting of the wedge area. The distance that will be your profit target. Now you need to understand this. The most important thing we have, which is the foundation of trading, is support and resistance. This is very important. From this, you need to understand the rectangle pattern. This is the way to use support, and it helps you understand this pattern. Now the price has moved after the trend. We got consolidation, a rectangle channel or sideways channel or horizontal channel. Now call it whatever you want. That channel is formed. Okay, it can be bearish, it can be bullish, it can be continuation, it can also be reversal. So you have to keep an eye on that. So when the price breaks it on the downside, we have to place a stop loss above it, and the distance between them will become our profit target, and so on. When the price broke it to the upside, we placed the stop loss at its bottom and made the distance in between our profit target. This is mostly used for breakouts, and this is one of the most successful ways to trade. Keep an eye on this, and I hope you will become successful by using them. Now we have pennants. Pennants are powerful continuation signals. When the market has moved a lot, marketing follows. It is kind of like a rising falling wedge. Okay, it has the same pattern. It will keep making higher highs, higher lows, and low or low highs made at a decreasing pace. If it breaks outside, then in this. What is the difference in that? In this also it says our measurement is the instant measuring entrance of the wedge. What do? We measure the movement of the previous downtrend or uptrend, and we make it our future target. This pattern has very big profit targets, so ours is just small. Its risk ratio is very good. This is its nature. These form only after strong moves. Any entry, we have said where to make it. When the craftsman draws the wedge at his break level, we will enter there. What will be the target, the move? That is such a big move. No target in it is the distance. We will set the next target, and in this we have to place it above or below the wedge. So you need to understand one thing. So now we move forward. Triangles have symmetry. The triangle is very symmetric. This will form an exact triangle. It will form a triangle of more degrees. It will not be slightly tilted up or down. Both lines will be equal. This will only happen when we have a move. After the move, we will have consolidation. The rule high and higher low, or roller rose or roller high, will form but it will form in that symmetrical shape. Breakout can happen in any direction. If it goes up, what do we need to do? We need to place a sell below the triangle, make the wedges distance the profit target, and achieve it. Similarly, if a breakout happens downward from where the triangle started, the heights distance will be our profit target. This will come to our side. We will trade like this on the upside of the triangle. We will trade like this on the triangle. After this, we have types of triangles. Now, just like a symmetric triangle, it can be two-sided, but that is an ascending triangle. An ascending triangle is one-sided. It is a bearish pattern. All right, when the price goes up and consolidates, its upper line will be completely straight, its lower line will be completely slanted. So make up an exact ascending triangle that when we break out on that side, the starting distance of the triangle, the area, by counting its distance, will be our profit target, and our stop loss will be above the upper line of the triangle. Similarly, we have this descending triangle, which is exactly the same as the ascending triangle, but this is a bullish pattern. The lower line of it has to be straight, which is above it. It has to be vertical, just like in the picture. What this is, the break we have, its profit will be the same distance as the starting distance of the triangle, and our stop loss will be below this triangle. So you need to keep an eye on this. Triangle,